Opening to the upside of the line in the sand. Interesting. Shadows at 37 from open. Where is open? 77, 37, 75, 15. Straddle basically takes us right to all-time highs. That's interesting. Straddle to the low takes us to 74.40. That's an interesting reaction there. I would like to see how we react off 7,500. There's a lot of positionings at 7,500. Not specifically today. But if we look at depth view, $7,500. Actually, let me adjust the strikes here. 75.50. All right, so 7,500 you can see is where customers are long calls. There's a lot of it too, which is likely what's driving this negative gamma profile here. Not to mention all the negative gamma positioning for today between 74.70 and 75.30. It's fishbone pattern, but the blue here, the dealer positive positioning, it's negligible. I don't consider it as much because they're really small. A line in the sand was basically the daily 74.80 level. Just kick off the morning. That's the line in the sand. That's the speed flip. Yeah, we opened 74.77, so 37 points will take us to about all-time highs. All-time highs, I believe, is at 75.17. So we're just a few points shy of that. Above the line in the sand, which is this yellow line here, things should drift up. I just played a short scalp this morning from like about 9:10, or sorry, between 9:10 and 9:15. Shorted to market open and just kind of took profit. But that was really just a play towards the line in the sand. And then I wanted out because I didn't think that it was very possible. Like it's not high probability for me to hold through the line in the sand, considering it could bounce there or push through. I don't know what to expect at 7,500 though. I'm not going to play reversion off of it. Just give me 1 second. I'm trying to do something here. It's part of my workflow in the morning. I just kind of felt like I started a little late. All right, so we almost touched 7,500 there. It was 74.99. Let's see what the reaction is. don't think I can play a reversion trade though. It's not how I would normally play a reversion trade. A little bit of a rejection there of 7,500. What is that, about 8 points? Not something I like to see, or it's not something I would typically like to play here, because on the ODTE, the sizing wasn't large enough for me. And it also really wasn't the edge of the node or the edge of the cluster. Things are starting to change now, so we'll see. Let me just swing over to the other chart here, just so you can see the straddle was 37. Quite the gap up there. This is old. That's old too. For the most part, I would say 75-40, 75-50. 75. Let's go to 80. Let's see what we see here. 400. I can't see us running down to 400. But yeah, the magnet seems to be that 74-40 all the way up to 75. 75-40. 75-40 SPX through to 75-75. All-time highs, obviously, in the books. But the magnet is that blue zone on the gamma chart. But right now we're just hovering at that 7,500 level. YM is, yeah, both. Let's see here. YM rejected a little early. Now it's just coming up. NQ rejected when SPX hit 7,500. They're rejecting off that 7,500 level for the most part. A 10-point rejection off that 7,500 level. I wish I saw something here. On the ODT expiration, I didn't see anything. Wasn't anything major anyways. 7,500. Intraday showed much less than the daily, but I guess there was something there to start. And then on top of that, you have the next two expirations, so Tuesday and Wednesday, that showed reasonable size, wherever that went. Now I think that line in the sand is pretty much defines where we're likely to drift to. Shadow's at 35 points now, slowly decaying. And this yellow line here is the line in the sand. It's basically driven by that 7,500 level. But if we push under, the speed kind of flips. $74.86 low there on SPX. Today's profile is the opposite of yesterday's profile. So yesterday's profile was very slow and pinning, and the magnetic point was 7440. Yeah, basically hovering around that gamma peak line, and everything was quite slow. Customers were selling at the money vol. Hey, Koshik. Today, we get the opposite, where customers are buying at the money vol, which means they're long calls or long puts. And this matters because it kind of like helps define the characteristic of what the price action is likely to do. So for instance, yesterday you kind of got that pinning action that that was influenced by the 7440 level. And this gamma peak is what defined that 74, the gamma peak was defined by the 7440 level. And we ended up settling, I think, 7445. But today, we're looking at the opposite. And you can see that with the negative gamma that we see here. That's driven by the 7500 level. And also, not to mention the negative gamma pocket between 7470 all the way up to 7530. So you can see that here. And it's because customers are long calls or long puts. Same reaction from a market maker perspective and from a gamma perspective. But that yellow line is the line in the sand, and it's basically where the speed changes. Yeah, but we got that decent reaction off 7500, which was quite nice. But I did not play it. I didn't see it on the intraday level. If I saw a larger level at 7500 from an intraday perspective, it would have been much easier for me to play. But the reason why I thought the 7500 level would come into play, not only to mention that, not to mention that it's a 75, it's like a whole number, 7500, right? And if you look at this morning's depth view, this table here, 7500 had pretty decent large sizing for the next two expirations. We're looking at May 26th, which I believe is the Tuesday, and then May 27th, the Wednesday. So it was likely to get a reaction, and we did get a reaction off 7500. Shadow is still hanging out at around 35. It was about 37 to start. Which, if we just moved up from the opening print of around 74.77-ish, where it should take us up to the all-time high level. I'm definitely going to watch this gap here just to see how we react off of it. But it looks like we filled this gap here. Oh my goodness, I can't believe I didn't draw this in. That was my mistake. There's a confluence for the rejection. And then all-time highs. Yeah, we basically got the gap fill rejection. Okay, so if we got the gap fill rejection and had I actually had it drawn in, I would have taken that trade. That along with the depth view showing us that customers are long calls there, which is like a negative gamma effect on the market, but oftentimes we reject those levels intraday. You seeing anything today, Koshik? Yeah, if the short was from 7,500, I'd take it to the line in the sand, which is around 74.81. I think we're basically tapping right off of it right now. Yeah, I can't believe I didn't draw that gap fill in at 7,500. I mean, I think it's in the notes, but the notes are more for, the notes is not something I can actually see, since it's like, it's part of the platform that I'm using. I just kind of fill it in so that way people can see. But yeah, that 7501 on SPX open May 15th was in the notes, but I should have had that drawn if I was gonna potentially short off of it. All right, let's see. We're just hovering around the line in the sand right here. I'm gonna kick myself. I am definitely gonna kick myself. So we're moving from the 7,500 gap fill. We're moving under the line in the sand. The edge of the negative gamma cluster is 7470. So I would expect some sort of a bounce around there. Yeah, 7,500 was good confluence. Sadly, I didn't identify it on my charts. Gap fill rejection. Good for 20 plus points. Just want to see what half gap is here. Half gap's about 74.60. Okay, so we got a little bit of a bounce off. 74.72. 74.72. Oh, let me move back over. So I can show you the negative gamma cluster, or negative positioning cluster. So 74.70, that was the obvious, shouldn't say obvious, but 74.70 plus minus 5 points is typically what I would have used as a potential long opportunity here. But I would only take the long for about 5-10 points at most, mainly because, or maybe to like a fair value gap or something like that. Mainly because we're still flirting around this line in the sand. I'm just going to zoom in a little bit here. So this yellow gamma trough is the line in the sand that I've identified in the morning pre-market and thought it would play a significant role today. 74.70 ES, you're looking for longs? Oh, not to mention ES also bounced off of its value area low there. So just transitioning back to the chart and the value area low. It's almost like a perfect bounce. Value area low, and then with the confluence from the dealer positioning, the edge of the negative gamma level. The 15-minute also looked pretty good from a price chart perspective. I really like that doji when it looks like this. But right now we're still hovering around that line in the sand. So for me, my hands are off right now. I want to think we'll drift lower now that we're under the line in the sand, but it doesn't quite work that way. Like dealer hedging flows are not the only flows in the market. If you're new to the stream, don't hesitate to say hi or ask any questions. We're just trying to build a learning community here around gamma profiles for the most part, and share some trades every now and then. But generally, at most, we would trade like 1 or 2 trades a day. So below 40, below 74.70, things start to slow down because of the blue positioning, which is like localized positive gamma effect. And you can kind of see like 74.60 there. It's a little bit of blue. And then as you go lower towards 74.40, you get a little bit more blue. So it kind of like slows the momentum of the downside. Very slow here. So far, it looks like just a drift lower here. YM is drifting down a little. NQ is kind of doing similar. VIX is just hovering around 16.88. If we are at 7,500 ES and calls are being purchased at 7,800 ES, how will they make money? Oh, they'll lose money for sure. But the only, if you're looking at, let's say, what TradingView is showing you, I believe it's just going to show you open interest, and it doesn't really tell you if it's bought or sold. Same thing with Interactive Broker. It doesn't tell you if it's bought or sold. Same as the volume. It doesn't tell you if it's opening or closing a position. So what I find is if there are positions at 7,800 ES, it might be a sold call position. And if they're selling a call, they'll sell it to open, which means they're harvesting premium. It'll be pennies, don't get me wrong. But yeah, there's a lot of like hedging, if you will. I go 7,800, 7,600. Oh, sorry, not 7,600. Oh, yeah. Sure. I'll just run that. No, 278.50. All right. So yeah, the 7,800 positioning here on SPX is a customer short. Sorry, no, that's not right. It's a dealer negative positioning, which means it's a customer positive positioning. So they are long. They are long here. Now, one of the things that I learned from vol signals is that these positions often correlate with other positions. So for instance, maybe there's a 7,750 that goes together with the 7,800, and then maybe something else up a little bit higher. And sometimes it could be a hedge. Sometimes it could be it could just be premium harvesting, which means they're just selling volatility and selling premium in hopes of gaining premium. But unless you're like a true market maker and are able to track the routing of who bought the call or who sold the call and how it's sold, yeah, there's like different guys like Chem. He's able to pick up on when certain firms buy or sell, or certain firms are taking positions, mainly because he's been doing it for like 20, 30 plus years, right? And the same with vol signals. He's able to pick up on these things, and there's like suspicions. Like whenever he has a suspicion, he would normally throw it out there back in the day. But now that he's too big, he might not do that anymore. But yeah, the 7,800 position that I saw, if it's just by itself, it'll definitely lose. Like, there's no way we're hitting 7,800 today. But comboed with another position. So for instance, if it's a 7750, and it looks like it's pretty close. If it's a 7750, then they're taking 2,300 positions plus or minus, and they're selling premium here at 7750, and then they are buying 7,800 as a, so it acts as a call spread. So it's a short call spread that they're doing. If that is in fact the same position and the same person. I say person, it could be a major fund hedging their books or collecting premium, whatever it might be. Just drifting a little lower here. We got as low as 74.63, 74.63. More put volume at 7,400 ES, 7,500 ES. $7,400. So around 7,400, you have it's a combination actually. So it looks like customers are long 1,600, and then customers are also short 5,100, which is why you have a net position of 3,400 positions showing here at 7,400. So they're net collecting premium here. So the way, yeah, green positions slows the market down / are collecting premium. Or put volume at 7,400, then calls at 7,500. Yeah, I only I do caution using ES because I know so what Vol Signals had basically told us is that dealers, most I guess portfolio managers, big money, they all use options on SPX. So if you're leaning on options on SPX, you're looking at the gamma, charm, and positioning that we see here on SPX options. And when market makers hedge these positions to stay delta neutral, they have to hedge by buying or selling ES futures. And they would normally use ES futures, not options. So for instance, I think one of the rules here is using charm, like charm right now is measured at 20. You multiply that by -2 and you'll get the amount that dealers have to buy or hedge. So buy or sell to hedge their portfolio or their books. So for instance, if you do 20 multiplied by -2, you get -40. -40 implies that the market makers have to sell. They have to sell 40 ES futures just based off charm alone every 5 minutes or so. I believe there's a calculation for gamma too. I'm not too familiar with that one. I'm going to have to polish up on that one. So SPX considered like the dominant flow and where market makers have to hedge the most. I'm not sure what the reaction is for ES, but I know for something like SPY, I think he would always reference SPX specifically. So I've always referenced SPX as a result. I'm still watching this cluster here at 74.70. I know we broke down, headed towards 74.63. I'm just looking at the gamma profile here where the positive meets negative. So this is, in theory, is 0 gamma. And we more or less bounced right off of it. Sometimes it's not that clear in the positioning, but the positioning, I like to pay attention to the cluster here. And if we want to stay in the negative gamma cluster, then 74.70 plus or minus 5 points. And I know at the top has been 7,500 so far, but technically we can run up. I'm still referencing the line in the sand, which happens to be around 74.83 right now. And would like to see if we can stick to one side of that line in the sand. Yeah, so this here is a daily level. It does not have intraday positioning included in it, but oftentimes the price action respects it, which is why I like to look at it from a daily perspective. From an intraday perspective, I definitely love looking at the clusters in the breakdown by strike here. And this is all ODTE positioning. We got gamma to the left. Blue's positive, red is negative, and your zero line is the dotted line. That's a zero gamma line. And you see how it's like quite dynamic as time moves throughout the day. The gamma profile changes. And this is one thing that I've learned after using OptionsDepth as opposed to something else that I think way back in the day before Spy Gamma used the proper breakdown by strike. It was very much like a line in the sand. He had like a zero gamma line that he draws in, and then a bunch of other lines. And typically, I guess I was subscribed, but I never really knew what to do with it. I never understood how markets react off of it, and sometimes it didn't react off of it, so it never did work out, which is why I unsubscribed. And then eventually found vol signals online on Twitter and Chem Carson, and those are guys that understood how market makers work. So I learned off of them, and vol signals was the one that pointed us to OptionsDepth at the time. So on the left, you got the real gamma chart. And then you have and all this is based off of ODTE. There's some calculations in the background that include the next few expirations, but that's proprietary. I'm not familiar with it. I just use the platform. And you get the breakdown by strike. This is all ODTE positioning too. You can see that the negative or short strikes have a negative gamma impact. So these are dealer negative or short positions, which are really retail or customer long positions. So they're like long puts or long calls. And long puts and long calls is a bet on volatility, which have a negative gamma impact, as you can see on the gamma chart. And then the blue section here is our positive strikes. And the positive strikes have a slowing effect to the market or to the price action. So for instance, we moved into 74.62. It happens to be like the rough edge of the cluster, and where price action kind of becomes more supportive, if you will. It slows down any down move. And their dealer positive positioning or dealer long positioning, which happens to be customer short positions. So when the customer is short calls or short puts, they are selling volatility. They are selling the option for premium. And that has a positive gamma impact from a dealer hedging perspective. And then you also have the charm chart here on the right side. And the charm chart tells you, okay, so the blue section here is supportive, just generally positive flow, positive hedging flow from market makers. And in the orange section, it is suppressive. So generally you have dealers or market makers selling futures to hedge. And I find that charm generally doesn't really come into play until the afternoon for the most part. And you can kind of see that with the value here. You can see that bubble on the top of the charm chart. It shows pretty light positioning at a pretty light readings. Like we're talking about absolute values of 0 to 10. Here's 7, 8, 6, 0. And then as we kind of approach later on in the day, or right now, for instance, we're sitting at about 12 charm. And you basically multiply that by -2, and you get what the number of futures that market makers have to sell every 5 minutes. So right now they only have to sell about 24. And then as you kind of approach the end of the day, you start seeing where market makers have to sell like 200 ES futures every 5 minutes or so. And then the reading gets higher and higher as we approach the end of the day. But so far, I've got nothing here. Mainly because I've been watching the line in the sand. The only short that I took was this morning, pre-market, and it was around, I think 9:10, 9:15. Shorted to maybe about, I think roughly around open, and then closed that one out because it had opened near the line in the sand, and that was my concern. Breaking through the line in the sand, which is this yellow gamma trough area, was going to be, it wasn't a high probability trade for me to hold through, so which is why I closed. And then I obviously missed the 7,500 strike rejection, which was also the May 14th to May 15th gap fill, or gap, I should say. And we ended up filling it at about 7,500 this morning and rejected really nicely. 10:23 a.m. lows is from rejection of previous week value area highs. Hey, that's a good point. Thanks for that, Koshik. 10:23. So this is probably here. Rejection of previous week value area high. So the previous week, we're looking at May 11th through to May 15th, right? Now the way I'm measuring it might be a little bit different from the way you're measuring it, and hopefully we're aligned here. Yeah, that's pretty darn close. value area high, basically around 74.80. And I think the low was at 74.80, yeah. Just about. Yeah, that's a good one. Oh. Meant to do was pop this open. There you go. Yeah, so if you identify these levels on a higher time frame, which is what you're doing, which is perfect, and then you correlate it to the intraday gamma profile and the breakdown by strike, I find that there's high probability trades off of it. So for instance, this morning we bounced off 74.63, right? And that was the equivalent to 74.80 on ES. The gamma profile showed a zero gamma line at around 74.65-ish. And any influence like that, I would say it's plus minus 5 points for the most part, because nothing's perfect. So I would say we bounced off like a very key area here, and along with your value area high from the previous week, it's perfect. Now from an intraday perspective, just looking at the 5-minute chart, I didn't really see that much here. Yeah, we got close to here, and I think we ended up with an SMT, I believe, between ES and NQ here. Yeah, we got a slight SMT there. So I guess it was a decent long based off of price action too. But I guess when you combine gamma or the breakdown by strike cluster, and then you look at the value area high from last week because it's a critical zone, it makes a lot of sense. And then the SMT presented itself too with a 5-minute bottom wick, which believe it or not, Koshik, the SMT indicator by Lux Algo picked this one up, surprisingly. So let me just pop this on here. So that's the indicator. Yeah, Lux Algo SMT divergence. It surprisingly picked it up, but oftentimes it does not. I know we were looking for an SMT indicator earlier this week. The 7470 is growing in size. Yeah, not to mention 74.63 was also roughly the previous day high on SPX. Let me take a quick look here. Yeah, we're just hovering around that line in the sand. I have to think it's going to take a lot of effort to break down 74.70 just based on the sizing alone. $74.70 there is long calls. 2,300 long calls. And 700 or so long puts. YM looks like it wants to push down. A friend of mine is fed his gamma charts into Claude, and has been trying to get Claude to provide good put flies or call fly options, in which case would generally cost anywhere between $2 to $7 of premium, so about $200 to $700 worth of premium in options. And today, it seems as if it is suggesting checking premiums on flies centered at 75.40, which is way up there. So that'll be interesting because we are in a negative gamma environment. So it is easy for us to have a headline, or the market itself can lend itself very nicely. The gamma profile anyways would suggest that we can move up relatively easily through this negative gamma profile, especially on some sort of headline. And so far, what's been driving this week have been headlines about the Iran war and how close we are to an agreement. I believe we got it like 3 separate times yesterday, and we got 3 separate green shoots. On SPX or ES. Though the final green shoot was the most epic. I think it was the one from 1 o'clock and on. I'm still not seeing anything definitive here, but if the options for the call fly at 75.40 is cheap, by cheap I mean like $2, which is $200, or somewhere around like $1.50, which is $150 in premium, it would be worth a shot to try, because the payoff would be more than like more than 10x. Yeah, we're looking at a straddle price of about 28 points here. So the market's only pricing in about a 28 point move in either direction. VIX just hit 16.59, which is the low of the week. Seems like we're just trickling up now. I can't imagine that we would reject 7,500 again, though. If we should get there. I mean, we're still quite a ways away. About 17 points or so. I personally thought there would be faster movement, but instead we're just hugging that speed flip or line in the sand line, which is the gamma trough. I know any downside move would have slowed, but I was expecting if we were going to stay under the speed flip or the line in the sand, I thought we would run down, bounce, reject, and then kind of like mess around and maybe move towards that 74.40, 74.30 for the gap fill. It's still possible. Yeah, we're just still hovering around that same gamma trough. And if we move above it, I'd have to think bullish. and natural drift up. $74.40. That seems like where the market would aim for. I believe Monday is a US holiday. And let me just confirm. I believe it's Memorial Day. And let me check the NYSE schedule. Yeah, Memorial Day, Monday, May 25th. So trading hours will be very limited for futures. Yeah, so as a result, and SPX won't be open. I will not be doing a stream on Monday. I'll be back on Tuesday though. Not seeing much here. NQ looks like it's going to break to the upside, which leads me to believe ES will do similarly unless YM counters that and we just pin here, but this doesn't seem like a very likely pin location. $74.90 is going to take a lot to get through too. Like I feel like we're waiting for a headline at the moment. Okay, YM is starting to roll a little bit. It looks like it could go for a bit further downside on YM. Bit of SMT here at the highs between ES and NQ for the last two 5-minute candles. But nothing real major at the moment. I'll be right back. Okay, I'm back. Yeah, so just curious if you had any questions about what you saw today on the gamma chart, or even the breakdown by strike, or the charm chart. It's still gonna take a lot of effort to break through this 74.90 here. This area is not normally this sticky. In a negative gamma environment, you generally have a little bit more volatility too. And this is localized negative gamma, like driven by today's positioning for the most part. Oh yeah, YM just ended up pumping, so we got a nice move there. But yeah, I suspect this is gonna continue to the upside drift. Okay, short speed to downside. First short speed, which she uses interchangeably with negative speed. She means that the slope of the gamma curve is negative or pointing downwards. Mechanically, short speed environment dictates how realized volatility will react to price movements. Short speed environment dictates how realized volatility will react to price movements. In short speed regime, the correlation between the spot price and realized vol usually leans positive. This creates two distinct market dynamics. Volatile upside as the spot price moves up. The volatility expands. Upside momentum becomes highly fragile. Stable downside. As the spot price moves down, realized volatility is expected to decrease. That's short speed. Short speed. From a position perspective, local short speed typically forms on the upside right wing of the custom customer iron butterfly spread. This pattern indicates that traders are shorting at the money realized volatility while longing upside realized volatility. Indicates that traders are shorting the money. Tells you that traders all right. This does look like it's a drift up. Continue drift to the upside. Customers long iron butterfly spread. Here, profile is short iron fly spread. Yeah, it looks like we're going to finally break here. I have to think we're going to break to the upside. The magnet would be 75.40, which is 40 points away, quite far. Another rejection. Holy cow. Might just be an initial pullback. But anyways, I think I'm gonna cut off the stream here. I just don't have any trades that I really want to take. And we've been moving up, so I think 7,500 is still the true test. And if 7,500 holds, then we're gonna head back down, I think, towards that 65. Maybe even test further into that gap potentially. If we break above 7,500, I have to think we're gonna run towards 7,530, maybe ultimately end up at 7,540, but it is quite the distance to there. I would like to see the all-time highs, which is 75.17-ish. It's gonna be a tough one. Headlines would absolutely need to take, like, we would need a headline in order to take us there. Anyways, I'm gonna call it a day. I will be watching charts this afternoon. I just don't know that I'll be taking any trades. Maybe if something comes up, I may consider taking a trade, but we're testing 7,500 again. All right. Thanks for joining the stream, and we'll see you on Tuesday. Take care.